The director of global talent acquisition at Ripple Labs had a talk with Ray Fuentes in which they discussed the expansion of XRP cryptocurrency. One of the most important questions that has been raised is whether or not the SEC or other government agencies are deliberately seeking to affect or depress the price of XRP. Worryingly, it is possible that these activities are being taken to change the public's perception of XRP and the asset class that it represents more generally. Do you think it's because they caught like Gary Gensler and Elizabeth Warren want to buy it at these suppressed prices? Or what are your thoughts? Ray said, what are your thoughts? And what are your thoughts? At that point, McBride stated, I won't speculate on that. I will not participate in that activity. However, you should be aware that the reality is that financial institutions and banks will not take the risk of utilizing an asset when the regulatory environment is unfriendly. As a result of a regulatory climate that is regarded to be hostile, it is highly improbable that banks and other financial institutions will adopt or employ digital assets such as XRP, as stated by McBride. There are enormous barriers created as a result of the risk and uncertainty that are connected with such an environment. The fact that XRP has not experienced widespread institutional adoption, despite its potential, may be explained by the fact that institutions want to steer clear of assets that could put them in a position where they are vulnerable to regulatory and legal issues. Institutional silence and non-disclosure agreements. It was stated by McBride that financial institutions might be restricted from publicly confirming their connection with Ripple or the use of XRP due to non-disclosure agreements in Adesti or other constraints that prevent them from doing so. This secrecy may be a result of the current legal and regulatory issues that Ripple is facing, particularly the lawsuit that WCC has filed against the company. The litigation, in conjunction with political pressure from influential individuals such as Elizabeth Warren, has created the notion that XRP is being targeted for attack. The argument put up by Sean McBride is that the technology behind XRP is quite advanced and ahead of its time. He thinks that the sluggish acceptance of XRP is not due to the technology being out of date. Rather, it is because it is taking longer for individuals and organizations to accept and incorporate it into their systems. The fact that many government officials, especially those with whom he has contacts, are unwilling to talk or acknowledge XRP and Ripple is something that he considers to be both peculiar and cause for concern. Even though he has personal contacts with a few members of Congress and senators, they have refused to interact with the subject matter, which in his opinion is peculiar. Ripple vs. CC was finally resolved after years of effort. But was it a victory or were there more significant issues lurking within the cryptocurrency arena? The majority of analysts think that this victory is momentous and will have repercussions throughout the business for a very long time. Chris Dolmetsch, a legal reporter for Bloomberg, is an example of this type of analyst. He recently suggested that the outcome of this lawsuit would establish a precedent that could be advantageous to the entire cryptocurrency industry overall. As Coinbase, the largest cryptocurrency exchange in the United States, prepares to face its legal challenges against the Securities and Exchange Commission, CS.OL, a recent court verdict in favor of Ripple could present a particularly advantageous strategic benefit for Coinbase. Conflicts in the courts regarding Coinbase and the influence of Ripple following the lawsuit that Ripple filed against the Securities and Exchange Commission said the focus is now on Coinbase, which has been embroiled in a legal fight with the SEC since June. The SEC has accused the exchange of functioning as an unlicensed broker and clearing agency. Coinbase was dealt a huge blow when its application to dismiss the lawsuit was denied, even though the exchange has made attempts to avert the action. Elliot Stein, a senior litigation analyst, thinks that Ripple's partial triumph may provide Coinbase with a hope for survival in the current conflict it is engaged in with the Securities and Exchange Commission. Ripple was forced to pay $125 million in a recent verdict, which is a number that is significantly lower than the initial $2 billion in fines and penalties that were sought by the Treasury Department. Stuart Algerodi, the chief legal officer of Ripple, expresses his disapproval of the position taken by the SEC, particularly its contention that digital assets do not possess any inherent worth. In addition, he noted that the compensation could be paid from the company's financial reserves, and he expressed his satisfaction at having successfully concluded this chapter. Although Ripple presented the verdict as a victory, it is possible that the matter is not yet completely resolved. The legal writer for Bloomberg, Chris Dolmetsch, said that the Securities and Exchange Commission SEC could still appeal the ruling of the court, which could potentially delay the case even further. However, there's also the possibility that the legal disputes that include Ripple and Coinbase could eventually make their way to the Supreme Court system. These high-profile cases could eventually escalate to the nation's highest court, which could potentially set a precedent-setting verdict that could influence the future of cryptocurrency regulation in the United States. According to a former litigator for the Securities and Exchange Commission SEC, what does the ripple effect mean next for cryptocurrency? The Ripple case will continue to have enormous repercussions for the cryptocurrency industry as it continues to develop. It is possible that a positive conclusion for the case of Ripple versus Coinbase could have a domino effect, so enhancing the situation of other cryptocurrency companies that are subject to regulatory scrutiny. An adverse verdict, on the other hand, might tighten the regulatory noose that surrounds the industry, making it more difficult for cryptocurrency enterprises to operate within the United States. The sector is currently at a pivotal crossroads, and the resolutions to these cases are likely to have a significant impact on the path that it will take in the years to come. In general, are driven largely by news, popularity, and in the case of XRP, court decisions, ads, draws. In the case of XRP in particular, that is the case. A lack of inherent value, such as actual assets or cash flows, is a characteristic of these currencies. Consequently, the sentiment of investors is a significant factor in determining their worth. A ripple effect has already been formed on its price as a result of the recent winning streak against SCI. Pardon the pun. The market, on the other hand, appears to think that the project may not be completely out of the wilderness just yet, as evidenced by the trend back to the baseline price before the ruling. There is a possibility that the price of XRP will increase following the conclusion of the SEC case in the coming months, particularly if the penalties for the institutional sales of XRP are light. However, it is not yet known if the price will remain high or fall after the conclusion of the case. XRP is susceptible to tremendous influence from the general situation of the cryptocurrency market, which extends outside the sphere of the law. Draws makes the following observation. A significant upswing in the cryptocurrency world could be a boon for XRP. If other cryptocurrencies experience a surge in value, XRP may be able to ride the wave. The bear as a case, nevertheless, not every possible situation is a cause for optimism. It is possible that the resolution of the ongoing case would result in a decrease in the price of XRP. Because a paradox. There may be a decrease in interest in XRP once the hype surrounding the case has subsided. The information that has been provided is not intended to be trading advice. There is no responsibility for any investments that are made based on the information that is provided on this page. Before making any decision about investments, we strongly advise conducting independent research and consulting with a knowledgeable professional.